We've got Fani Shankar, Head Financial Markets at ING Vesya Bank, who now joins in on the show. Fani, it seems to be a given that now the Reserve Bank of India is going to go ahead with a rate cut in the Jan 29 policy. But what's your expectations in terms of the language, and do you believe that now growth is also going to merit as much of importance as inflation has?
Yeah, clearly, I think the Reserve Bank's tone will start shifting a little more towards growth, and which is a stated line as well, that growth is becoming an important consideration apart from inflation. The December inflation data is likely to be a little bit of an upward number, but that's no surprise because that's more or less factored in by all the analysts and I guess even by the Reserve Bank. So in general, growth will start taking a little more of a priority, and also the fact that the government has started acting quite proactively on a lot of fronts, including on fiscal deficit reduction, addressing the current account deficit to the extent that it can, attracting capital flows. So a lot of reforms have also started taking initiative. All of this should weigh positively on the Reserve Bank's consideration of rates. So we do expect a slightly more dovish stance with a 25 basis point cut in January and possibly another 25 in March.
Right. So, Fani, to your mind, are bond markets pricing in a 25 bips cut from the Jan policy?
Not completely. Over the last couple of weeks, the bond markets have kind of shown a little bit of a down move in yields, but it's not significant. And if you consider repo at 8% and bond yields so anywhere between an 8 and 8.15 kind of a range on the benchmark, you're still talking about a nearly 35-40 basis point over repo if the rate cut happens. So that's not exactly where we think the bond markets will trade if there's a repo cut. So given closer to the possibility of a repo cut and the reality of a lot more repositioning happening in early January, the bond yields should start, the benchmark yields actually should start coming off a little bit more.
And what's your view as to where the rupee is headed against the US dollar now?
Well, okay, on rupee, the volatility will continue for some more time because there is still some amount of uncertainty on the global factors. The fiscal cliff issue is still not resolved, and the uncertainty will probably linger on for a little longer. But that said, overall on the rupee side, it does not look like there is significant depreciation left on the rupee. Most of the adverse factors are factored in. The current account deficit, which is pretty negative and hovering at about $50 billion a quarter, is more or less factored in. Capital flow should surprise a little to the upside because we should probably see some amount of FII money coming in January and the first quarter next year. So, and if the reform fronts, the movements there are, or as we are expecting them, we're talking about, cutting down subsidies, maybe a few more things on fiscal deficit reduction. And if we can avoid the rating downgrade quite decisively, then capital flows will get a little more of a positive boost. So all of this should see rupee more or less capped at probably these levels and probably, at about 55, 56 range. And then it should start looking to appreciate a little.
So, Fani, what to your mind could be the rupee range for the first half of this year?
For the first half of calendar year 13, we should look at a stronger rupee, maybe sub 54, and it's slightly difficult to put a range on it because I do expect rupee to continue to stay volatile. I don't think even after the fiscal cliff issue is resolved, the global factors are completely stabilized. There's still a fair amount of uncertainty on Europe. US growth will still need to recalibrate given how the cliff issue resolves itself. And given these uncertainties in the global environment and the fact that some of the flows into India will be volatile, I think volatility is something that we should brace in for. Rupee will continue to be in a slightly wider range, but in general the trend will be towards a slightly appreciating rupee within that volatile band. So sub 54 is something that we should see in Q1 calendar year 13.